What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 6th of 2018. Well, folks, today I want to spend a decent amount of time to talk to you all one-on-one about a topic that I know has been on the minds of many people in the cryptocurrency space, and that is the question as to whether or not we're close to another altcoin cycle or bull market in cryptocurrencies. Now, before we dive into this topic, and before I share not only my opinion, but some of the data points that lead me to where I currently stand on the question, I want to spend some time to clarify a few things. As always, this is just my opinion, guys. It's not financial advice, and again, I want you to use my voice alongside many other things to help formulate your opinion and think about it yourself. Second off, I want to reassure to all of those out there who feel kind of wrong in a way by being concerned about when the next altcoin cycle is or bull market is, that this is a completely natural thing. You can love the technology in this space, but at the same time, because you love the tech so much, see that there's market potential or potential for price gains because there is a lot of dramatic volatility. This is a very early market. So again, don't feel bad about that, guys. I think that's a completely natural thing. And third, I want to spend some time to really get a point across here. I've seen a lot of people in the crypto space bringing up terms like hopium and this whole idea of, just simply living off hope that something's going to happen in this space. And I want to be clear that you will never see on my videos me tossing out this one key indicator is going to reverse the entire market or this one factor is going to change everything. As much as I believe there are some big catalysts, we'll talk about some of them throughout this video, there is a wide range of topics. And as a YouTube content creator, I'm not going to sell you on the idea that this one indicator is going to fix everything. And again, there's no guarantee of this. We have to be open to the idea that things could go the other way. But I'm going to tell you today, again, my video is just about my opinion. I want to show you guys why I currently believe we could be on the cusp of an altcoin cycle. Now, if we really think about this critically, before we look at any major data points here, we've been in a bear market since, it depends what you're discussing. If you're discussing specifically Bitcoin or altcoins, it's a little bit different, but we've been in a bear market generally since the midway of December, ever since Bitcoin has depleted from its highs of $20,000. This was after the CME and CBOE futures had come into fruition, and at the peak, we obviously saw a drop afterwards. Now, whether or not you think the futures price, the futures contracts are holding the price or not, personally, I don't believe that. I think it has helped maybe possibly reduce volatility. At the same time, there has been a bear market over the past 7 to 8 months. And as we go into the month of August, a lot of people have been curious as to whether or not this could be the month where we actually see things reverse. So I want to talk about a few different data points here and not get caught up rambling here. I know I've obviously been trying to provide the broad picture here, but I want to go through a few different things that have been kind of key things that I've been watching for. Things that have made me positive, but at the same time, some things that I'm neutral on at this point, and I'll continue to watch and see if I can formulate an opinion on once we have more data to work with. So going on here, one of the most common indicators here is market cap. Obviously, market cap is a valuation multiplying price times supply of coins and combining all the cryptocurrencies out there that CoinMarketCap tracks. And we've seen obviously that CoinMarketCap has read that market cap has gone down from 823 billion to around 250 billion about 3 times. Now we've seen prices drop a little bit below that range as we did back over here in June, and along with that as well, slightly above that range as we are right now. We actually haven't come down and officially touched $250 billion. We're close to it at the moment, around 254 billion. But at the most part, for the most part of things, we can generally see here that with most market cycles, you tend to have exponential run-up and exponential correction and a slow slope building a base. And this is what we call price strength confirmation, where hopefully we aim to see indexes or prices of a specific cryptocurrency hold at a certain level to turn maybe previous resistance into new support, and in some cases just build a base for a future rally. And then we don't have exactly previous points of resistance, which were down here and down here. We do have cryptocurrencies holding more than 3 times already and coming up on its 4th time around this valuation at $250 billion. So I've been pointing out to this that, again, we might be coming down for another correction on this, but at the same time, we're going to have to be hoping and looking out to see if this is going to hold here, if we're going to hold. And I think if you get somewhere below, say, $240 billion or $230 billion, it might be a cause for concern. But at the moment, we're still holding here. So this shows as a pretty positive sign that markets are solidifying price action, solidifying a lot of the gains. And again, to put it in perspective for those out there who might be thinking that crypto is just completely done, if we come back here on market cap, we can see the whole price history here. we haven't gone below levels we've seen back in November. Okay, so the majority of what happened in 2017, in regards to time frame, is still in play here. It's really just been what happened in December and January, which I think we can all agree was quite ridiculous, getting deducted from the valuations. And again, provides room for future run-ups in this case. And along with this as well, we've seen Bitcoin dominance, which we've had a general target of around the big even of 50% for Bitcoin dominance. But much like over here, for example, around 45%, we're starting to see a decline here. We're starting to see a little bit of a dip. And some of those gains are from other coins. They're from Ethereum. They're from Ripple. And we know that Ripple, as we'll talk about a little bit later on, is a key indicator for momentum in markets. Ripple is, much like many other players, some of not only the leaders back in January, but show when altcoins early on are going to start making moves. And we'll get later on into talking about how this could be a sign that in August we are expecting to have the major breakout. This is where I think in late August we could possibly see this. Now, to go into Bitcoin here, before we dive into some altcoin metrics, I really don't want to spend too much time on Bitcoin here. To be fair, price did break below the 100-day, which we were hoping for, as well as the 21-day, and is currently trying to test and see if we can hold here on the 50-day. We've seen that over the past 48 hours. It's trying to hold in this range. I don't know if it's going to hold in there or not. The fact of the matter is, though, is that I want to see it hold above 6,000 in general. I want to see Bitcoin hold above this range. If it can hold above 6,000, I'm not worrying about Bitcoin right now. And to be fair, with all the positive news that has come out as of recent, I don't think you're going to see it dip below 6,000. At least not over the next, say, 2 or 3 months, unless for example, we have ETF rejections, we have continued negative press and coverage and regulation coming in on crypto, or if there's some other form of like a black swan or things that we can't factor in for. For the moment, I think it's going to hold above $6,000. What I want to spend time talking about is some of the price action we've been seeing in altcoins, and we'll come back to it later on after we talk about a few other important things. But let's go ahead and take a look here at Ripple, and we can see here, if I pull it up here on the right exchange here, I'll get it on Bittrex so we have the price action to work with. We can see that Ripple right now has recently rebounded off of previous resistance over here. And this is a level, again, that was serving as resistance as prices tried to come back up before December. And we can see this as well in a lot of other altcoins. As we talked about, there was a few different cryptocurrencies we used as an index for market cycles. NIM is a perfect example here, where we can see back in May, the crazy rally NIM had back in 2017, as well as in December going into January. There's a lot of key cryptocurrencies when compared to Bitcoin where we can get a very, very clear sign as to whether or not altcoins are about to move. And they usually follow together. As much as on a rational basis, should they not? It's besides the point here, guys. When we're analyzing markets, we need to see collective trends. We need to find similarities. We need to find where things can show early signs for the grand macro trends. We want to find the bigger swings in this market. I don't like to trade in between these cycles really, because I like to play the big swings, which are much easier to call in this case. And as we go along here, I'll go ahead and take a look at a few more here. We've been seeing, for example, large players like Dash, for example, coming down, and is now testing support, as we draw a line here, on a key level of resistance in the past. Excuse me, let me rise it up a little bit. And actually, if we get it on the right exchange here, no, sorry, it's right here. We can see that this was previous resistance back in the past. So again, we're taking a look at some massive macro trends, some longer term plays, and how price is starting to solidify. We've seen a few times it's tested this previous level resistance as support. Now, there's a lot of other cryptos that we can take a look at, guys. There's no way we can scan all of them. And there are some cryptos that I believe in the altcoin space do have a little bit of room to flush down. I want to use the analogy here, and I hope you guys are watching the whole video through because I'm spurring out a lot of things. My general conception of where we are right now is that we're in the 9th inning, using a baseball analogy here. A lot of people have been talking about in traditional markets, whether or not we're in the 7th or 8th or 9th inning of the bull market in traditional markets and equities. And you can use the same analogy for crypto. There's 9 innings in a game of baseball, and if you're in the 9th inning, that means that things are about to change. I think we're in the 9th inning of this bear market. We might have one more drastic little flush over the next, say, week or so. Outside of that, though, I think going into mid and late August, you're going to start to see things swing upwards. Now, again, there's other cryptos you can take a look at. These are kind of the ones that I like to look at, the momentum plays. We've seen, for example, if we take a look at the USD valuations as well, which I want to spend some time to look at on Dash, we're coming down to previous levels of resistance. Same goes for Litecoin, for example. And again, the USD measurements are important. They are key. If you're going to use any other fiat comparative, I'd say the dollar, because a lot of people around the world are trading in tether pairings. And along with that as well, the dollar is just a very strong currency. So you can see this in Litecoin, you can see it in Bitcoin building a base level of support. There's a lot of different currencies. I recommend you go look across a variety of the market leaders, a variety of other currencies, and you can see things have dropped at a 9 or 10 times, a 90% correction from their highs, 80 to 90%. And that's what you want to look for. You want to see those exponential run-ups and the exponential corrections where we have really nice discounts across alts. Now, I'm not saying, again, to rush into this, but let's go ahead and talk about some of the external data points. So this is something that has really been kind of the key indicator as to why I'm getting more optimistic about alts specifically. I recently went to the Hybrid Block Summit in Bangkok in Thailand, and I got to meet one of my favorite guys in the crypto space. It was Tom Lee, or Thomas Lee, as you've probably seen him on CNBC. Now, I don't mean to be critical on mainstream media, but I'm not a big fan of the majority of people that they have on to the CNBC Fast Money show. Okay, there's just not too many great people on there. Tom Lee, though, I think I told him personally, he's one of my favorite guys because he's data-based. He doesn't live off of emotions. He looks at the data and tries to find trends, and I love that about him because I'm a macro trader. I like to find trends. I like to get the big picture of things and play big swings and play the big moves in markets. And Tom Lee has been mentioning this. This is an article all the way back from March, and he's been preaching this, and like he did at the conference, this idea that we're kind of in a winter, in a sense. We're in a bear market for altcoins. Understandably, after the crazy gains we saw back in January, in December and January. Now, he hadn't been calling from this call in March continued bear market in the sense that we're going to see much lower prices. And you know what? We actually really haven't. When he made this call back in March, was pretty much generally the bottom for most altcoins, or we've come back to that price range and have been holding ever since on some of the large protocol plays like Cardano. I think as well, it's been the same for players like Icon and a few others. You know, we've seen generally that a lot of these cryptocurrencies have held on their base. And as he goes to talk about this, he talks about how they go through purgatories, where generally bear markets can last from anywhere from 70 to 231 days. And if you take a look at the data, actually, I don't have the chart here. I wish I did. I'm going to try and see if I can get it from him, but it's material from Fundstrat. Basically, you see that during August and September is most likely where we're going to see a lot of these altcoins make serious moves. And as we can take a look at the date, we're obviously stepping towards the later part of August. So I'm pretty confident alone on this data that this is a pretty good indicator that, you know, we've gone through on altcoins a general 80 to 90% and sometimes even more than that correction from the highs. And we've built a base testing these levels on the USD measurement and sometimes in the Bitcoin comparative multiple times. So because of that, I think we have alone a good case that we might be stepping towards something more optimistic soon. But again, I do not live off one indicator. And as much as I love Tom Lee, it's not the only thing I'm going to go off of when I'm doing my analysis on markets. As much as I love hearing stuff like this, I want to go ahead and talk about some of the fundamentals in this market. We have some really serious fundamentals coming up. There's been a lot of misleading information on this that made it sound like it's something more grand and people are wondering why the price didn't move. Price should have moved, but this isn't what many people think it is. Coinbase has announced custody considerations of an addition of 37 new crypto assets, including XRP, EOS, and XMR, Monero. And basically what this means is that for their custodial clients, the institutional clients who want to manage investments, either I think for themselves or hopefully for retail investors down the road, that Coinbase is offering a custody solution taking care of these cryptocurrencies. This basically means that institutions are going to be able to invest in a wide range of altcoins, and they don't have to keep it on their own paper wallet or on their own, wallet on their PC or their mobile phone. They can actually have someone who keeps it secure and can keep on the record on paper that they own those cryptocurrencies. So this is really big because this is going to be an entry gateway for institutional money to invest in a lot of these crypto assets. It brings in demand, it brings in excitement for a lot of these players, and helps people diversify in this space of emerging currencies rather than being regulated to, say, Bitcoin or Ethereum. So this is really good to see in regards to Coinbase expanding, because as of recent, as you all know, probably back a few months ago, they got a license to actually do a lot of this stuff, to actually issue securities. So no matter if these are securities or not, institutional clients can buy into this. They're accredited investors. They can invest in these speculative assets so long as they have an entryway to doing that. And Coinbase is going to provide the custody for that entryway for those who can invest in it. Going on as well, there's been all this positive news coming from the New York Stock Exchange owner, or I think he's one of the individuals at the head of ICE, which is a massive exchange owner, discussing how Bitcoin can be the first worldwide currency, and more specifically talking about this recent news of Bakkt. This is a new startup that has been coming out as of recent, discussing having backers. Ironically, the name's Bakkt, and they're backed by a lot of big companies. But Bakkt is basically aiming to do all kinds of things. This was founded again by the individual who worked. It's tied with the New York Stock Exchange and ICE, and is looking to build an application that is backed by Microsoft and Starbucks and a lot of other major companies in order to provide a gateway to actually spending crypto, to actually getting crypto in your 401k. And even there's some talks, as we're talking about payment solutions, about possibly bringing crypto credit cards that compete with MasterCard and Visa. And we're going to talk about why this is important later on. But again, kind of sticking to the investment side and the institutional side of things, I want to tackle this first. So generally speaking, going back to this article here, we can see here that 2018 has really been the year of talks of regulation. It's been talking about building a foundation for cryptocurrencies to make it to the mainstream, seeing if this market can mature. And when I mean mature, I mean turn into a larger market that's less volatile, that's in the hands of more people, and can actually be used in a day-to-day manner. Along with this as well, we can see Bakkt has been aiming to work with BCG, which is Boston Consulting Group. They do about $6 billion of consulting revenue a year, along with Starbucks and Microsoft, to create an open ecosystem that supports the growing $270 billion cryptocurrency market. Now, with ICE getting involved, and again, more regulatory institutions outside of just the CBOE and the CME getting involved in crypto in different ways, this is an extremely positive sign. I think people, again, are too caught up in the headlines. They're too caught up in the idea that institutions are not going to get involved in cryptocurrency. If they weren't going to get involved and they were going to try to shut this down, they would have done it back in 2013. But instead, banks were the heaviest to research into blockchain technology. These different institutions of finance have different ambitions, and they know that they can make a lot of money building payment gateways and building investment solutions to put crypto in 401k through trading fees, commerce fees, whatever it may be. They want to get a piece of the action. They want to open up to their clients the ability to trade and speculate in these markets. So, I mean, with the talk of possibly having a gateway to bring Bitcoin to 401ks, bringing it into your pension funds. I mean, you can read through the article here. There's a lot of exciting stuff. But as they talk about later on, this is really what's, huge win here. Cracking the 401k and IRA markets would be massive. Being able to bring Bitcoin to pension funds, and then also, this is the other thing as well. Talking about being able to cut in to the $25 trillion consumption market, where people are going out and spending money. This is something that I think people are still kind of underestimating here. When we talk about real adoption, I know a lot of people are like, Nick, I'm tired about hearing the ETF. I'm tired of hearing about speculating, investing. I want to see real adoption. And I'm on the same boat, guys. Again, I love markets. I can't deny it. I love investing and trading and, doing all these things and trying to spot macro trends, as I stated earlier. But the fact of the matter is, I want to see this actually get adopted. I 100% agree. And this market is not going to become the multi-trillion-dollar currency market it wants to be unless people can actually go out and spend it in some way, shape, or form. So, in this talk of trying to tackle this $25 trillion consumer market where people are using credit cards and debit cards, why is this going to be, in my opinion, one of the big paradigm shifts for cryptocurrencies and generally in the financial system? We talked about an article on a live stream a few days back, about maybe almost a week ago, where I was talking about how Kroger, one of the third largest grocery retailer in the U.S., weighed in on expanding a Visa ban against using debit cards and credit cards. Now, why would they do this? Well, Kroger, much like most retailers, sell at either products on very thin margins or they sell wholesale. In the case of Kroger, they were dealing with credit card fees anywhere from around 2 to 2.5%. This is pretty much the general standard rate that you get between Visa, MasterCard, American Express, all these card processors, where literally every time you swipe, that a charge of 2 to 2.5% is getting added into the price of your goods or deducting the profit margins out of Kroger's pocket. Think about that for a second. 2.5% out of every single transaction. If your business, for example, operates on a profit margin of, let's say, 3 or 4% quarterly, let's say you hope to make 3 or 4% on all of the revenue that you generate. That's your actual net profit margin. If every transaction you do, it's very rare nowadays in America that people use cash. If every transaction that you're doing is from a credit card swipe or from the chip or tap and go, whatever it is, that's eating up your profits. And in fact, it's a $90 billion expense for retailers every year. So again, this opens up an opportunity where cryptocurrencies, even if, for example, they need to be directly converted back to fiat, there are cheaper services where you can actually convert fiat and get it at lower rates. And in this case, they might be able to use cryptocurrencies or different types of crypto that offer instantaneous transactions, feelessness, these very quick confirmation systems that don't require days, that don't require even, hours or in some cases minutes to confirm. I think this is where crypto is going to come in. And if we see through Bakkt that they build a payment gateway, they're already doing it for Starbucks and they're already doing it for Microsoft. If they can open this gateway to a wide variety of different companies and say, hey, Kroger, hey, Walmart, you tired of dealing with 2.5%? We can bring those fees down drastically and have an instantaneous payment solution where you don't need to deal with the bureaucracy of Visa and MasterCard and the almost kind of monopoly that they've had over this sector, printing off fees off of every single transaction. If you can offer that solution, you're going to get that disruptance. You're going to get the opportunity to spend cryptocurrency at a variety of different retail stores and not just through solutions like Square. That's the really exciting part about this, guys. So again, we've had a lot of fundamental developments here. There's a big opportunity here. This was a little bit more specifics if you'd like to dive into the specific story about Kroger. It's one of their major subsidiaries, food company stores, which is generally based out of California, where they actually banned the use of Visa cards. So it shows you they're sticking to their actions there. But anyways, going on to the third component here, we've been talking about a lot of these really cool fundamental changes. And this is one that, again, I've probably beaten the dead horse millions of times about, the Bitcoin ETF. Whether or not we get a Bitcoin ETF, I think has become a little bit arbitrary at this point because of the news of what the individuals from the New York Stock Exchange and ICE are looking to do with Bakkt, as well as the corporate clients behind it. I think it's going to open up the gateway for a lot of people to invest and spend cryptocurrencies. But at the same time, I still have a steady belief that you're going to hear about a Bitcoin ETF by this year. It doesn't mean that a Bitcoin ETF is going to come into fruition and that you can trade a Bitcoin ETF by this year. I believe that you're going to get a confirmation and approval from the SEC this year. That is something I've stood by. I know it is very contrarian to most people and what most people have said in the space. Most people hold probably a little more of a longer term viewpoint, thinking that it's going to take well into 2019 or 2020. I think you're going to see it. And I think some of the best ones that are out there right now are the ones that are coming earlier rather than later. And that is the VanEck Solid X Bitcoin Trust. This is the physically backed ETF that has not only VanEck behind it, but it has the CBOE behind it. They're using the measurements of not only is it physically backed, that's one thing that I think is going to be massive, and it's going to set a massive demand for crypto. It's going to set a massive demand for Bitcoin to physically back this ETF. But along with that as well, they've fixed all of the issues that the SEC has been concerned about. If you go through this article here, I have a good one here talking about credible sources. Look, I don't even care if there's credible sources saying it's nearly certain. That's all speculation. But what I really liked were these quotations, because they really hit the nail on the head in regards to the fact that all of the FUD recently with the Winklevoss Twins ETF getting rejected was pure FUD. There's no concern there. There was obvious reasons. If you understand what the ETF was proposing, which was to use Gemini as an exchange rate for the underlying I'm trying to think of the actual acronym here. It's pretty much like the fair net value of the underlying asset, what it's actually worth. You would understand that that's a silly thing to use one single exchange for this. Whereas in this ETF, they're going to be using the CBOE and CME futures contracts as a means to measure the volatility. And we haven't seen the circuit breakers trigger on the futures for quite some time, meaning that they've had to halt trading. It was only during the first few weeks. Ever since then, we haven't seen that on Bitcoin. It's actually been pretty steady measurements because they use a variety of different exchanges for the exchange rate. So you can't have direct manipulation unless you can really go about manipulating all the exchanges. So in this case, they've really met the concerns on market manipulation. They've been meeting the concerns on custody of all of these different systems. I think that they're probably one of the best positioned to do it. If not that, though, we have September coming right around the corner, which could be the confirmation for a continued rally. So we have all these fundamental things that are looking good. We have the technical side of things. Things are cheap right now. And again, you don't want to get bearish and call for Bitcoin 2,000 or 1,000 and even something like 3,000 or 4,000. I really don't think you're going to see that, at least in the short term. And the reason I say that is because you don't want to get bearish when other people, you don't want to get bearish when prices are low. You want to get bullish. You want to get optimistic. And prices have been holding quite steady at these levels over the past few weeks. Again, I'm going to leave it here, guys. There is no guarantee. There is no one indicator. There is nothing of the sort. But we have not made new lows since back here in June of 2018. Okay, we've been holding quite well. We broke the line of resistance, which was a good sign, and we'll have to see if Bitcoin can hold here. The fact of the matter is, though, is that we have not made any serious dramatic lows since all the way back in February. We've been holding quite well. Fundamentals are looking good, and we played the market cycles. We've had a nice extended bear market, around 8 months. That's good in crypto terms. That is literally years and years, as you all have probably felt it. I know we expect things to happen overnight. It takes time for these things to go through, and it's also going to take time for markets to possibly make new highs and go higher. That all being realized, we're getting real merchant adoption possibly around the corner, possibly more institutional interest coming over the next few months with these new gateways to custody and getting engaged in crypto. And so much positive developments and potentially a Bitcoin ETF and Ethereum futures contracts, as we've talked about in the past. And I'd like to hear what you all think about this down in the comments down below. I don't want to be biased on this. I definitely do hold my current position that I think things are going to swing up, but I want to hear your opinions as well. What are your fear targets at the moment? Even if you're optimistic, what do you feel could hold us back from continuing higher? And not just listing a price range you believe. Why do you believe that it could hit that range? As you all know, I've set some very optimistic targets, but I'd like to hear from you guys as well. Again, don't want it to be an echo chamber. I want us to be a community, and I want to hear from you guys. And again, I take all types of different perspectives. I want to hear from you guys specifically. So, hope you guys are doing well. We'll talk a little bit more about this in the next few videos. I'll keep you all up to date. Generally, though, my target is that we're going to see it sometime in later August to early September. So, it's right around the corner. We've possibly got one more final flush to come through, seeing as we're in the 9th inning, in my opinion. We'll have to see what happens. Until then, everyone, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.